Welcome back, investors, to Ticker Time News. I'm Adam, and Dell is computing nice gains following the company's release of strong Q1 results. The quarter's impressive numbers include a huge EPS beat, representing a welcome bounce back after Q4's sizable miss. Revenue upside was more modest, but still quite strong. As a highlight, the company guided Q2 sharply above expectations, even though Dell continues to face supply chain issues. Now, both of Dell's operating segments posted similar revenue growth rates. ISG grew 16% year over year to $9.29 billion, while its much larger CSG segment grew at 17% year over year to $15.59 billion. Now, Dell is best known for its consumer PCs, but it does have a high exposure to the enterprise market. Within ISG, sales of servers and networking equipment were standouts, growing 22%. I did have concerns about this category following Cisco's recent disastrous and disappointing results, but Dell performed much better. On the CSG side, commercial sales soared 22% year over year, while its consumer side was up only 3%. Dell is seeing a shift in spending from consumer and PCs to data center infrastructure. Looking ahead, CSG growth is expected to moderate as the consumer portion of the market slows. This is consistent with the expectations shared by other PC makers. Last year, people spent significantly on home offices amid the pandemic, and federal stimulus measures helped support PC purchases. So it's not surprising to see the consumer side look relatively weaker this year. However, based on ISG and commercial CSG, enterprise are clearly picking up the pace as offices start to reopen. In terms of the supply chain, Dell conceded that it had to deal with a wide range of chip shortages that impacted both CSG and ISG in Q1. The COVID lockdowns in China didn't help either. As a result, Dell's backlog levels are elevated across CSG and ISG, and they should remain elevated throughout at least Q2. Overall, Dell posted a great quarter despite multiple headwinds. I was nervous about the state of IT spending heading into this report after Cisco recently missed on revenues and guided Q2 way lower. I mean, sharply lower. But Dell's enterprise business seems to be making a strong comeback, and Dell's Q2 guidance really jumps out the most, as others are guiding lower and the industry is getting squeezed on supply chain issues. Dell's upside guidance for Q2 was a bit of a shocker, though. Looking at the chart, Dell had a nice gap up over resistance, but it is coming into some resistance right now, right around its simple 200-day moving average. That sits about $52.96 right now. And then there's a second area that could act as resistance for Dell if it continues its march higher, right around $53.50. So that zone, mark it on your chart as an area of resistance if Dell can continue to march higher. I'm definitely adding Dell to my watch list, especially given that it has a PE of just 7.1 times. Oh, and Dell brought back its dividend payment. They're now paying 33 cents a share. So if you owned 100 shares of Dell, that's $33 for you each quarter. So what do you think about Dell's earnings report? Let me know in the comments below, as your comments help us all to better understand. And do me a favor, click that like button, share this video, and join us in beating this crazy market by clicking the first link in the description. I'd love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.